Hello, and welcome back to another episode of Financial Market Insights for Traders. I'm your host, Sophia, and today we're diving into a sector that continues to spark curiosity, caution, and opportunity all at once: real estate and REITs, with a close look at housing market predictions and global opportunities as we head into 2026. Now, real estate has always held a special place in the world of investing. It's tangible, it's traditionally stable, and for centuries it's been the bedrock of wealth creation. But as we approach the middle of this decade, investors are asking with increasing urgency, is real estate a good investment in 2026? And if so, where exactly should we focus our attention? In this episode, I'll break down housing market forecasts for 2026, key drivers like interest rates, demographics, and ESG factors, a deep comparison of global REIT markets from the US to Asia Pacific, Europe, and emerging markets, which sectors are expected to host the top performing REITs in 2026, and finally, how you can position your portfolio to take advantage of the opportunities while steering clear of the pitfalls. This will be a detailed and comprehensive discussion. So whether you're a new investor exploring property exposure for the first time, or a seasoned trader looking at REIT ETFs on your watch list, there's something here for you. Let's get started. Housing market predictions for 2026, the first big question on everyone's mind. What's going to happen with the housing market? We've lived through a wild ride in recent years: pandemic-induced price spikes, a rush to the suburbs, and then a sharp slowdown once central banks lifted interest rates to fight inflation. But what does 2026 hold? Interest rates and affordability. By 2026, economists expect interest rates to stabilize. They're unlikely to fall back to the record lows of the 2010s, but they also won't remain at the restrictive peaks we saw in 2022 and 2023. For buyers, this means mortgages will still be more expensive than in the past, but not crippling. This moderation should restore balance to the market. Demographic shifts. Demographics are another powerful force shaping housing. Millennials are now in peak family formation years, pushing up demand for multifamily housing and starter homes. Gen Z is entering the rental market in force. Meanwhile, aging populations in the US, Europe, and Japan are creating strong demand for senior living and healthcare-related housing. Urban versus suburban dynamics. During the pandemic, we saw a rush to the suburbs. But here in 2026, urban centers are making a comeback. New York, London, Tokyo, and Singapore are buzzing again, driven by hybrid work arrangements and the enduring draw of cities as cultural and economic hubs. Suburbs, however, remain resilient thanks to infrastructure improvements and lifestyle balance. Supply constraints. Housing supply remains tight. Construction has been held back by labor shortages, high material costs, and regulatory barriers. This underbuilding means prices are unlikely to collapse. Instead, most developed markets are expected to see steady, moderate price growth of around 3 to 5% annually through 2026. ESG and green real estate, and finally, one of the biggest structural changes: sustainability. By 2026, energy efficient, eco-friendly housing isn't just nice to have, it's essential. Properties that meet ESG standards command premiums, while outdated stock risks becoming stranded assets. For investors, this is a key differentiator. So the housing outlook is steady, not spectacular. Gone are the days of double-digit appreciation every year, but real estate continues to provide resilience and long-term growth. Global REIT comparison. Where the opportunities lie now, let's turn to real estate investment trusts, or REITs. REITs give investors the ability to access income-producing real estate without the headache of direct ownership. They're liquid, diversified, and known for steady dividends. But the global REIT landscape is varied, and some regions clearly stand out. United States REITs. The US has the world's largest and deepest REIT market. In 2026, three sectors in particular look strong. Data centers. With AI, cloud computing, and 5G expanding rapidly, demand for data storage and computing facilities is skyrocketing. Industrial and logistics. Warehouses and distribution hubs remain critical for e-commerce and global supply chains. Healthcare. An aging population drives stable demand for hospitals, clinics, and senior housing. But not every U.S. REIT story is rosy. Office REITs are still under pressure from hybrid work trends, and retail REITs face challenges unless tied to luxury or experience based formats. Asia Pacific REITs Asia Pacific is becoming increasingly attractive. Singapore's REITs, known as SREITs, are especially popular for their stability, global diversification, and high quality assets. Japan's REITs benefit from dense urban populations and logistics demand. Australia's REITs shine in industrial and infrastructure exposure. However, currency fluctuations and spillover from China's property slowdown are risks to watch in this region. European REITs Europe offers opportunity, though its REIT market is fragmented. Germany's residential REITs are backed by persistent housing shortages. In the UK, student housing and logistics stand out as growth areas. Northern Europe, meanwhile, is leading the charge in ESG adoption. Green certified REITs will likely dominate performance. But beware of red tape and slower GDP growth compared to the US and Asia. Emerging markets, then we have emerging market REITs. Countries like India and Brazil are still in early development, but the growth potential is significant. These markets offer upside for adventurous investors willing to accept volatility. Sector breakdown. What will lead in 2026? Now let's talk sectors. Which ones will host the top performing REITs in 2026? Data centers are at the top of the list. With artificial intelligence, cloud expansion, and 5G adoption, demand for server space is exploding. Industrial and logistics are next. Warehouses, distribution hubs, and cold storage facilities are critical to global commerce. Healthcare and senior housing will see consistent growth, driven by demographics. Residential multifamily properties in global cities with chronic housing shortages will remain stable income generators. On the other hand, office REITs may struggle with ongoing hybrid work, and traditional retail will lag unless tied to high-end or experiential offerings. So, is real estate a good investment in 2026? The short answer is yes, but with selectivity. Real estate in 2026 is not about speculative windfalls. It's about stability, diversification, and consistent income. As an inflation hedge, real estate remains one of the strongest assets. As a cash flow generator, REITs provide attractive dividends. And as a growth play, real estate offers exposure to high demand sectors like data and logistics. So, for those asking, is real estate a good investment in 2026? The answer is yes, if you're strategic about where you allocate your capital. Positioning your portfolio for 2026. Here are a few takeaways for positioning your portfolio. Diversify globally. Don't just focus on US REITs. Add exposure in Singapore, Japan, and Europe. Target growth niches like data centers, logistics, healthcare, and sustainable residential housing. Balance risk and liquidity. Consider REIT ETFs for easy exposure without tying up capital in illiquid assets. Prioritize ESG, green certified buildings, and sustainable portfolios will outperform. Stay informed. Central bank policy, interest rate changes, and currency risks all matter when investing globally. Final thoughts by 2026. Real estate won't be about chasing bubbles. It will be about identifying resilient, income generating assets and positioning smartly. Housing will grow steadily. REITs will shine in certain sectors, and investors who understand demographic, technological, and ESG shifts will come out ahead. So, yes, real estate is a good investment in 2026. And the top performing REITs will likely be those in data centers, logistics, healthcare, and multifamily housing across the US, Asia Pacific, and Europe. Call to action before I wrap up. If you're serious about real estate and REIT investing, you need the right tools and resources. First, check out the world-class, cutting-edge, user-friendly trading platform from crystalballmarkets.com. It's designed to give traders like you the flexibility to access REIT ETFs, global equities, and other asset classes seamlessly. Second, don't miss the Crystal Ball Markets beginner-friendly podcasts. They're a fantastic way to stay updated on trading strategies, macroeconomic trends, and investing insights in plain, easy-to-understand language. That's it for today's episode of Financial Market Insights for Traders. I'm Sophia, and I hope this deep dive into real estate and REITs for 2026 gave you clarity, strategy, and direction for your investing journey. Until next time, trade smart, stay informed, and keep building your financial edge.